All right, welcome back. Let's get on to our first couple topics here. What are plant assets and how do we record them at their initial cost? All right, so plant assets. They're also sometimes called, so also known as, AKA, sometimes you'll hear them called fixed assets or property, plant, and equipment. Or simply PP&E. Okay, so there's some other names for your plant assets. Let's go over their characteristics. Okay, they must last more than 1 year, or I should say expected to last more than 1 year. The company expects them to last more than 1 year. Okay, they must be used in the company's operations. Used in company operations. They must be tangible in nature, meaning they have some sort of physical properties, right? So they're physical form, something like that. Okay, so the first bullet point, the company expects these assets to last more than 1 year. Okay, so we know that they're long-term assets. Long-term. They have to be used in the company's operations. Okay, so think about like when you walk into Best Buy or some sort of electronics store, right? They might have a computer on the shelf, right? That you can come and buy. They also probably have computers where they ring customer sales up or they take customer orders. Okay, so they're both maybe even the same computer. Okay, the one that's being used to take customer orders or to assist customers, right? That is an example of a plant asset. Okay, so again, it might be the exact same computer, the one that's actually being used by the company, right? In this case, to assist customers. If a customer comes in and says, hey, I'm looking for this particular TV, right? And we look it up to see if we have it in stock. The one that we're using is a plant asset. The one that's on our shelf, right? The customer can come by and select it. That's inventory. Okay, so there's a difference between a plant asset and inventory. Yes, they're both assets, right? Current inventory is a current asset. Plant assets are long-term. And we said they are used in the company's operations. And then lastly, they have to be tangible in nature, meaning there's some sort of physical form to them, right? A computer, we can walk up, we can touch. Same thing with buildings, equipment, property. Okay, so those are the characteristics of a plant asset. All right, next, let's talk about calculating the cost of these plant assets. All right, so we know our characteristics. Now let's talk about when we buy that plant asset, how do we calculate the cost? Okay, so first let me give you the definition from the accounting guidelines about what should be included in a plant asset's cost. So it should include all costs to acquire the assets and ready it for its intended use. Right? So normally, right, if you think about we're going to go out, we're going to buy a new car, you got the purchase price that you're going to have to deal with. All right, that's definitely a cost. You got the purchase price. You also normally have to pay sales tax. There's usually some sort of like, what is it called? Like a transfer fee or some sort of fee you have to pay at the DMV. DMV fee. Okay. If we're buying a vehicle, maybe from a different state, because it's hard to find vehicles, we might have to pay for shipping. Okay, so shipping costs would be included. So we can't really start using it until we have that item shipped to us. If while it's in transit, we decide we want to take out some insurance, that's also going to go to the initial cost. Okay, equals initial cost of asset. Okay. All right, let's look through an example. Okay, but just keep in mind that definition. We should include in the initial cost of the plant asset anything we pay to acquire that asset and to prepare it for its intended use. All right, let's look at this example. So we have Lucy Company. They purchase a new heat press for their business. The listed price of the machine is $18,000. The supplier offers them a 20% discount on the price if Lucy pays cash and pays for the shipping costs. Lucy agrees since her cash balance is sufficient. Shipping costs are given to us along with the sales tax percentage. And once the machine arrives, Lucy pays a specialist for installation. What is the cost that Lucy will show on her balance sheet for this new heat press machine? Okay, so use that definition to guide you. Maybe pause the video, try working it out, and then unpause to see if we agree. All right. So you have the initial purchase price. Make sure you subtract any discounts. You can't capitalize any amount you don't pay, right? Because that would violate the cost principle. So back out the discount, which was 20% of 18,000. This is our new purchase price. All right, and done. We have to pay for shipping costs, include those shipping costs. We have to pay for taxes, of course. So it's 10% of the 14,400. Okay, and then the installation of 250, right? She can't use the machine unless it's installed. So add all that up. See what we get. $16,240. Okay, so that's the answer. This new heat press machine will have not a cost of 18, not a cost of 14,400, but a total cost of 16,240. The journal entry would be a debit to equipment, and it says she paid with cash. So cash, 16,240. To record purchase of heat press machine. Something like that. Yay. Okay. Good. I'll have another example posted so that you guys can try to work through it on your own.